We've got Hanna Luchnikava-Schorsch joining in on the show right now, Head of Asia Pacific Economics at S&P Global Market Intelligence. Hanna, great to have you today on ET Now. Thank you so much for your time. Tell me, what to your mind is driving global investors' interest, especially when it comes to Indian manufacturing first? You know, the scale benefits, cost advantages, or do you think it's technological expertise, or is it really because we're a cheaper option right now?
Good morning, and thank you for having me. So when it comes to investors' interest in India, I think first and foremost, investors are still betting on India's long-term strategic position, where we see that it already has grown in scale, size, and international importance over the past 3 decades and is set to become the third largest economy over the next 5 years. With its vast consumer markets. So this is really a matter of scale where global investors are looking at. But secondly, of course, in the current change of the global supply chains, we're also seeing that India is well positioned to benefit from its cost advantage. And as things stand currently, from its potential advantage in terms of the global tariff landscape.
Okay, Hanna, this is Nehi also joining in, and morning. Just want to get your sense on the credit availability for the Indian manufacturing space, because while India has a high SOI score in finance, when you talk about manufacturing, that sector's share in total loans has fallen from 12.7% to 11% thereabouts. Do you see this credit hesitancy changing anytime soon for this sector, especially now with Indian sovereign bonds entering global indices and new RBI lending frameworks that are also in place now?
I think there are two ways to look at it: the short-term perspective and a more strategic long-term perspective. And clearly what we currently see, not just in India, but globally, is that there is a tremendous policy uncertainty, which makes investors jittery and hesitant to invest. And this is something we see persisting over the next 12 to 18 months. Whereas on a long-term perspective, India still is a positive destination for investors, where the Indian regulatory reforms, both on the financial side as well as on the government side, have made a substantial progress in improving manufacturers' access to financing and the cost of financing for manufacturers. So this is something where we see India still reaping the benefits over the next 3 to 5 years.
Okay, Hanna, also help me understand in terms of global FDI inflows. Your report notes that India's share in global FDI inflows has declined to just 2.1% in FY24. This was around 6.5% post-COVID. Help us understand what's driving this reversal, and how do geopolitical shifts like China +1, other geopolitical plays that are existing right now, how would that impact India's medium-term FDI outlook?
Within the foreign direct investment, if we look at the net foreign direct investment, indeed, we have seen a decline in inflows to India since the pandemic. At the same time, the gross inflows of foreign direct investment have actually grown. And the reason net inflows have been declining is because of companies repatriating their profits back domestically, which is not necessarily a bad thing. It demonstrates the improvements also in equity markets, which is allowing the companies to repatriate funds. Well, if we look at the long-term potential, again, the progress India has made in terms of its benefits for the manufacturing sector, both in terms of some of the incentive which the government is providing to investors within its production-linked incentives, as well as I already mentioned, some of the improving access to finance. We do see that investors will increasingly favor India for its foreign investment. And also, as we currently see the changes in the global supply chains, where companies are reassessing its position against China, but also against some of the other regional competitors, India still stands to benefit from the already existing trend. And I think, if anything, the recent changes in the global trade policy have only demonstrated that investors and manufacturers will be doubling their efforts to look for alternative investment destinations beyond China. And India is well positioned to favor from this trend over the medium term.
Right. Hanna, a key theme in your report is benefiting from global protectionism, in particular, supply chain diversification away from China, Vietnam, and Thailand. What does your latest modeling suggest about the net impact of US tariff escalations?
If we look at the short term, it is very likely that, in particular, the unprecedented amount of global uncertainty which we currently see is likely to hold off private sector from its overall investment commitments. We have seen that a number of global firms, including Apple, has already made strides to move its production or parts of its production to India, but overall, particularly domestically, we still see some hesitancy to invest. And that is something that might be holding the momentum both in manufacturing and in investment in India over the short term. But if we look beyond just the short-term volatility and uncertainty, we certainly are likely to see that the benefits to India should be incrementally rising, particularly as India is opening up to global markets, is negotiating bilateral trade agreements, as we have already seen a recent conclusion of agreement with the UK, the potential upcoming trade agreements with the European Union and also the United States. And this is something which will be accelerating domestic momentum and contributing to domestic economy, both in terms of the contribution to the gross value added in the manufacturing sector, but also broader benefits to domestic economy in terms of employment and domestic consumption.
Right. So, Hanna, India's manufacturing sector still contributes just about, 17.25% to the GDP, so far short of the 25% target. Yet the PMI here remains resilient, and mobile phone exports surged about, almost to $20.5 billion in 2024. What do you believe is the biggest unlock needed to sustain and scale this manufacturing rebound? Which particular segment?
So India is still just starting its manufacturing journey on the global scale. And indeed, as you mentioned, India's share in manufacturing exports globally is still comparatively low, only around 2%. But yet we are seeing a sustained private sector optimism about the future of manufacturing sector in India. Indeed, the HSBC Manufacturing Purchasing Managers Index, which is produced by the S&P Global Market Intelligence, is showing that India has been consistently outperforming global peers over the next 12 months, which was basically a function of improving access to domestic market, as well as some positive trends in terms of labor sourcing and also inventories build up. And partly this optimism is indeed driven by some of the improvements that India has made on its competitiveness advantages, including its market opportunity, policy favorability, and resource availability, particularly financial and labor resources. At the same time, India still has a potential to improve on such parameters as logistics efficiency. And again, if we look at S&P Global's Strategic Opportunity Index and the momentum score of this index, which is showing India's progress in improving its competitiveness on the broad parameters over the past 10 years, we can see that logistics efficiency is indeed where India has made significant strides, even though from a low base. So this is where we see the greatest opportunity for improvement going forward.
Right. Okay, Hannah, great to have you today on the show. Thank you so much for taking the time out and speaking with us.
My pleasure.